In this video, I'll do a brief review of Teledoc earnings fiscal year 2022 third quarter results. So let's get right into it. The main theme of this earnings report was that it gave investors a sigh of relief. Overall revenue increased by 17% in the third quarter to 611.4 million. Loss per share of 45 cents was an improvement from the loss per share of 53 cents in the same quarter last year. The average revenue of its paid U.S. members increased to $2.61 from $2.40 compared to the same quarter last year. The main story, though, was that the company so far this year had taken a $9.6 billion charge, a goodwill impairment, earlier in 2022 related to its poorly timed acquisition of Livongo Health. It took a $3 billion charge in the first quarter of 2022, a $6 billion charge in the second quarter of 2022. So investors were bracing themselves for an even bigger charge off in the third quarter of 2022 that did not arrive. And so that was a big sigh of relief. The stock was up more than double digits on the day following the earnings release, partly due to this fact, the fact that the company kind of stopped the bleeding and said, you know what, the worst is behind us. We're moving forward now, and delivered robust revenue growth. Cash flow from operations also increased to 123.7 million in the 9 months ended on September 30th. That was up from 110.8 million during the same time in the prior year. Of course, Teledoc offers virtual doctor's visits and virtual, telehealth essentially. And this type of business thrived at the pandemic's onset when the people who were ill of health and needed doctor services were precisely the people that needed to avoid being in close proximity of other individuals, as a potentially deadly virus was in circulation. And so the need for virtual doctor's visits and virtual care was exponentially heightened during that period. So the fact that Teladoc is still growing revenue on top of that surging base level is impressive, to be sure. Of course, they're not going to grow at the same rate that they did during those heightened periods when people were avoiding doctors' offices as much as they possibly could. But they are still going to grow because there is a need for this service, right? Sometimes when you need to see a doctor, you don't necessarily need to go in person to see them. You might have something on your elbow that you want to show the doctor, and you can just show them over Zoom or over a camera and say, look, is this something to be concerned about? Is this something that I need to come in person for? Or can you just prescribe me something and I can some kind of ointment I can rub on it, or if I can just leave it alone, whatever it might be. Or maybe I just want to meet with the doctor. I have some questions to ask. I can just ask over a virtual visit instead of going to the doctor's office. And that provides a huge convenience advantage, as well as a better match of patients with doctors, because you might have a significant density of patients in one region of the world or in one region of the country, where you may have less patients in another region, but you have an equal disbursement of doctors. And so with telehealth, it provides an ability to match up doctors with patients, regardless if one area has too many doctors or too many patients. When you're meeting virtually, it mitigates the geographical disadvantage. And so that's a tailwind for Teledoc long term. So even if it has near-term challenges in changing consumer behavior and wanting and not needing as much telehealth services, longer term, the company still has a tailwind at its back. The management is forecasting revenue in the range of 625 to 640 million for the fourth quarter, which if they were to achieve that would mean 14% growth. It would be a slight deceleration from the 17% growth in the third quarter. Nothing for investors to be alarmed about. And actually, it could be a relief that even though economies have regained reopening momentum, that Teladoc's revenue is not decelerating as quickly as they may have feared. And they're forecasting a loss per share at the midpoint of 25 cents, which would be an improvement from the loss per share of 45 cents in the third quarter, and total members of 57 million. So all in all, this quarter's report was a relief to investors, which gave a lift to Teledoc stock. After the earnings announcement, the stock is up double digits. Of course, if you look back throughout 2022, the stock is down significantly for 2022, but at least this latest earnings report stopped the bleeding for investors, turned it around, and hopefully continues that upward momentum going forward. All right, so that's all I've got for Teledoc earnings review. Thank you for watching, and if you think I've added value to you and your investing journey, please hit the like button or subscribe. I would deeply appreciate that. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.